Hello students and welcome to the lecture. So students, as we know that we are covering the banking awareness practice questions and this is going to be our part 10. Previously we had finished till part 9. Now in this lecture, we are going to start with the part 10. In this lecture, we will do some practice questions and then we will see the summary of all of them. Okay. But before starting this lecture, as usual, we have our small disclaimer presented over here. And the disclaimer is like, the images used in a slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and owners of these images. If you are the owner of any of the images used in this deck and have any concerns or issues, please contact us at sathee@iitk.ac.in and we shall remove the images. Now let's first begin the first question, that is, what is D stands for in DBT? Direct, debit, devaluation, depreciated, none of this. To answer this, you will have 10 seconds. Time starts now. Time's up. Correct answer is direct. Go by the explanation. DBT stands for the Direct Benefit Transfer. It is a government initiative in India aimed at transferring subsidies and benefits directly to the bank accounts of beneficiaries. Main objectives of DBT includes, first is elimination of intermediaries. By transferring benefits directly, the government aims to reduce leakage and ensure that the intended beneficiary receive their entitlements without delays. Thereafter, increase the efficiency. Direct transfers expected to make the process faster and more transparent. Financial inclusion. DBT encourages individuals to open bank accounts, thereby promoting financial inclusion. Question number 2. The Federal Reserve System, also known as the Federal Reserve or simply as the Fed, is the central banking system of China, France, UK, USA, none of these. To answer this, again you will have 10 seconds. Time starts now. Time's up. Correct answer is US. Go by the explanation. The Federal Reserve System, commonly refers to as the Federal Reserve or simply the Fed, is the central banking system of the United States. Got established in 1913 and serves several key functions like first, monetary policy. The Fed regulates the money supply and interest rate to achieve the economic stability and growth. Financial supervision oversees and regulates banks and other financial institutions to ensure the stability of financial system. Lender of last resort, Fed provides emergency liquidity to banks during the times of financial crisis. Payment system facilitates the smooth functioning of payment system, ensuring that the transactions are processed efficiently. Therefore, the Federal Reserve specifically associated with the USA, making the correct answer D, USA. Question number 3. Rabobank is a multinational banking company based in which country? France, UK, Dutch, Poland, none of these. To answer this, you will have 10 seconds. Time starts now. Time's up. Correct answer is C. Go by the explanation. Rabobank is a multinational banking and financial services company headquarters in the Netherlands. Got established in the late 19th century as a cooperative bank, primarily serving the agriculture sector. Over the years, Rabobank has expanded services and operates internationally, providing various banking and financial solutions. The term Dutch here refers to its origin and based in the Netherlands. Thus, the correct answer is C, Dutch. Question number 4. The non-banking financial company allowed to accept, renew public deposits for a maximum period of 12 months, 24 months, 48 months, 60 months, none of these. To answer this, you will have 10 seconds and I will give you the answer. Time starts now. Time's up. Correct answer is D, 60 months. Go by the explanation. NBFC in India are permitted to accept public deposits for a maximum period up to 60 months, 5 years. This regulation set by the Reserve Bank of India to ensure that the NBFCs operate in controlled manner, providing a safe avenue for the public to invest their funds. So 60 months limit helps protect depositor and ensures that NBFCs maintain financial stability and soundness in their operations. Question number 5. The EFTPOS P stands for Payment Point Provident Paid Privacy. To answer this, you will have 10 seconds. Time starts now. Time's up. Correct answer is B. Point. Go by the explanation. EFTPOS stands for Electronic Fund Transfer at Point of Sale. It's a payment system allows consumers to make electronic payments using debit or credit cards at retail location. System enables the transfer of funds electronically from the buyer's account to the seller's account at the point of sale. Therefore, P in the EFTPOS stands for point, making the correct answer B. Point. Question number 6. What is the name of the code required to make interbank transfer through NEFT? MICR code, MID code, branch code, IFSC code, none of these. To answer this, you will have 10 seconds. Time starts now. Time's up. Correct answer is D, IFSC code. Just go by the explanation. The IFSC stands out for Indian Financial System Code. Is the code used for the interbank transfer through the National Electronic Fund Transfer NEFT system in India. Each bank branch has a unique IFSC code, helps to identify the bank and the specific branch during the transaction. This code is essential for ensuring that the funds are correctly transferred to the intended recipient's bank account. Therefore, the answer is IFSC code. Question 7. Dash is the rate of interest which is levied on the long-term loans and advances taken by the commercial banks from the Reserve Bank of India. Fixed interest rate, bank rate, fixed deposit rates, repo rate, none of these. To answer this, you will have 10 seconds, then I will give you the answer. So your time starts now. Time's up. The correct answer is bank rate. Go by the explanation. Bank rate is the rate at which the Reserve Bank of India lends money to the commercial banks for long-term loans and advances. Applies to loans that banks may take from the central bank, usually for longer duration. Repo rate, on the other hand, is the rate at which the RBI lends money to the commercial banks for short-term needs, typically for a duration of 1 to 3 days, primarily used to manage liquidity in the economy and is part of the monetary policy mechanism. Thus, while both rates involving lending from the RBI, the bank rate is specifically associated with the long-term loans and advances, making bank rate the correct answer. Question number 8. What was the initial share capital of Reserve Bank of India? 5 crores, 10 crores, 15 crores, 20 crores, none of these. To answer this, you will have 10 seconds, then I will give you the answer. Time starts now. Time's up. The correct answer is A, 5 crores. Just go by the explanation. Reserve Bank of India got established on April 1, 1935. The initial share capital of RBI was 5 crores, which was divided into the shares of 100 rupees each. This capital was contributed by the private shareholders, and the RBI was set up to respond to the financial crisis and challenges faced by the Indian economy at that time. Over the years, RBI has evolved significantly, but the initial capital of 5 crores played a crucial role in its establishment and functioning as the Central Bank of India. Question number 9. BSBDA, account could be extended to how many months after submitting OVD? 6 months, 12 months, 20 months, 24 months, 30 months. To answer this, you will have 10 seconds. Then I will give you the answer. Time starts now. Time's up. Correct answer is B, 12 months. Just go by the explanation. Basic Savings Bank Deposit Account, BSPDA, is a type of bank account that provides basic banking services with certain restrictions on transactions. According to the guidelines set by the RBI, a BSBDA could be extended up to for 12 months after the business of the official valid document for identity verification started. If the account holder fails to provide the required documentation within this period, the bank may convert the BSPDA into a regular saving account or close the account as per its policy. As account is considered dormant when there is no transaction through it more than 12 months, 6 months, 18 months, 24 months, none of these. To answer this, you will have 10 seconds. Time starts now. Time's up. The correct answer is D, 24 months. Go by the explanation. An account is classified as dormant if there are no transactions for more than 24 months or 2 years. This means that if an account holder does not conduct any deposit, withdrawals, or the transaction within this time frame, the bank will mark the account as dormant. This classification is important for banks to manage accounts effectively and to prevent potential fraud. Once an account is labeled dormant, the bank typically requires the account holder to take specific actions such as submitting identification or a request to reactivate the account before they could access their funds again. Question number 11. Non-banking financial company allowed to accept renew public deposit for a maximum period of 12 months, 24 months, 48 months, 60 months, none of these. To answer this, again you will have 10 seconds. Time starts now. Time's up. The correct answer is 60 months. Go by the explanation. NBFC in India permitted to accept or renew public deposit for a maximum period of 60 months. This regulation aimed at providing NBFCs the flexibility to manage their funding while also ensuring that they adhere to prudent practices in liquidity management. Allowing a longer duration for accepting deposit could help NBFCs stabilize their funding base, particularly important for them as they often provide medium to long-term loans. However, this also necessitates that these companies maintain adequate risk management practices to safeguard depositors' interest. Question number 12. While the B2C and B2B buying processes mirror each other, a significant difference between B2B and B2C marketing is the importance of the buying center, the importance of the culture of the purchasing firm, the formal structure of the buying process, the context of the buying situation, all of the above. To answer this, you will have 10 seconds. Time starts now. Time's up. The correct answer is A, all of the above. Go by the explanation. Importance of the buying sector. In B2B marketing, the buying process often involves multiple stakeholders, including decision makers, influencers, and users, which add complexity compared to the B2C marketing, where typically the consumer is the sole decision maker. Importance of the culture of the purchasing firm. The culture of a business could significantly influence purchasing decisions on B2B context. Factors like organizational values, mission, and operational practices play a critical role in how purchasing decisions made, unlike the B2C marketing where individuals' consumer preferences are more straightforward. Formal structure of the buying process. B2B transactions typically follow a more formalized and structured buying process involving detailed evaluation, proposals, negotiation, approvals, while B2C purchases are generally more spontaneous and simpler. B2B purchases often occur within a specific context that includes a long-term relationship, contractual obligations, and service agreements, whereas B2C transactions tend to be more transactional, less dependent on the context. Question number 13. Which is the loan of very small amounts given to the low income groups? Microcredit, microfinance, none of these. To answer this, you will have 10 seconds. Time starts now. The time's up. Correct answer is B. Microcredit. Go over the explanation. Refers to the provision of small loans to individual or groups, especially in low income sectors, who do not have access to the traditional banking services. Loans typically used to support entrepreneurship, small businesses, or personal needs, aiming to help the recipients improve their economic situation. Microfinance often encompasses microcredit but also includes other financial services like savings, insurance, and financial education tailored for low income individuals or communities. In this context, since the question specifically asks for loans of very small accounts, microcredit is the most precise terms, making option B the correct choice. Question number 14. Who among the following is eligible to issue commercial papers in India? Corporates, primary dealers, all India financial institutions, all of the above, none of these. To answer this, you will have 10 seconds. Time starts now. Time's up. Correct answer is all of the above. Go by the explanation. In India, the following entities eligible to issue commercial papers. First, corporates. Companies that meet the criteria set by the Reserve Bank of India could issue CPs to raise short-term funds. Primary dealers. Financial institutions that are involved in the buying and selling of government securities could also issue CPs as part of their operations. All India financial institutions, like the NABARD and the Industrial Finance Corporation of India, could also issue CPs. Since all these entities are eligible to issue commercial papers in India, the correct choice is D, all of the above. Question number 15. NEFT settlement is done in hourly batches, real time, daily batches, none of the above, all of the above. To answer this, you will have 10 seconds. Time starts now. Time's up. The correct answer is A, hourly batches. Go by the explanation. NEFT is a payment system facilitates electronic transfer of funds between banks in India. Operates on a deferred net settlement basis, meaning that transactions settled in batches at regular intervals. Especially NEFT transactions processed in hourly batches, typically every hour, during which the transaction received are settled. This is different from real-time systems like IMPS, immediate payment service, where provider instant transfer. Thus, the NEFT does not operate in real time or daily batches, making hourly batches the correct choice. Ah. Question number 60. National Financial Switch run by Indian bank institutions, Reserve Bank of India, Finance Ministry, National Payment Corporation of India, none of these. To answer this, you will have 10 seconds. Time starts now. Time's up. Correct answer is D, National Payment Corporation of India. Go by the explanation. The National Financial Switch is a network that facilitates interbank electronic fund transfer through ATMs and is primarily managed by the National Payment Corporation of India. NPCI plays a crucial role in the development and management of various payment services in India, including the NFS, enables seamless connectivity between multiple banks for ATM transactions and other payment services. Therefore, correct answer is D. Question number 17. Okay, question number 17. The type of banking in which banks provides all type of banking services, including both low risk and high risk products, called narrow banking, universal banking, investment banking, Islamic banking, none of these. To answer this, you will have 10 seconds. Time starts now. Time's up. Correct answer is B, universal banking. Explanation. Universal banking refers to a banking model where banks provide a wide range of financial services, including both traditional banking services like saving accounts and loans, investment services like underwriting and asset management. This model allows banks to cater to various customer needs by offering both low risk and high risk financial products under one roof. In contrast, narrow banking focuses on accepting deposit, investing in safe liquid assets. Investment banking primarily deals with underwriting and citing in the insurance securities. Islamic banking adheres to the Islamic laws, which prohibits interest and certain other financial activities. Question number 18. DICGC not insured any amount which has been specifically exempted by the corporation with the previous approval of Reserve Bank of India, Government of India, Insurance Regulatory and Implement Authority of India, Deposit Insurance and Credit Guarantee Corporation of India, or none of these? To answer this, 10 seconds you have. Time starts now. Okay, the time's up. Correct answer is A, Reserve Bank of India. Go by the explanation. The Deposit Insurance and Credit Guarantee Corporation provides deposit insurance to depositor in banks in India. However, certain amounts may be specifically exempted from insurance coverage by the DICGC, but such exemption requires prior approval from the Reserve Bank of India. Therefore, any decision regarding specific exceptions fall under the purview of RBI. Question 90. What is the initial capital amount to start small finance banks? 50 crores, 100 crores, 150 crores, 500 crores, none of these. To answer this, you will have 10 seconds. Time starts now. The time's up. Correct answer is 100 crores. Go by the explanation. To start a small finance bank in India, the Reserve Bank of India requires a minimum capital of 100 crores. This capital requirement ensures that the bank has sufficient financial resources to operate and provide services effectively while also maintaining regulatory standards. Question number 20. What is the initial stake of promoters in the paid-up equity capital of small finance bank? 25%, 30%, 45%, 50%, or 40%? Answer this. Again, you will have 20 seconds. Time starts now. Time's up. Okay, I'm sorry. Actually, 10 seconds you had, not 20. Correct answer is 40. Go by explanation. Promoters of a small finance bank in India must hold a minimum stake of 40% in the paid-up equity capital at the time of establishment. This requirement ensures that the promoters have a substantial commitment to the bank's performance, aligns their interests with the stability and growth of the institution. So here we have finished the topic. Now it's part for the summary. The DBT stands out for direct benefit transfer. We have talked about federalism system. We have talked about Rabobank. We have talked about NBFC public deposit tuition. We have talked about EFTPUS electronic funds transfer at point of sales. We have talked about NEFT interbank transfer code. We have talked about interest rate on long-term loans from RBI. We have talked about initial share capital of RBI. We have talked about BSBD account extension period. We have talked about dormant account duration. We have talked about NBFC public deposit duration, repeated, we have talked about. Difference between B2B and B2C marketing, we have talked about. Small amount loans for low income groups, we have talked about. Eligibility to issue commercial papers in India, we have talked about. NEFT settlement frequency, we have talked about. National financial switch operator, we have talked about. Type of banking providing all services, we have talked about. DICGC insurance exemptive approval. Initial capital for small finance bank. Promoters initial stake in small finance bank. All of these we have talked about. So with this, we have finished this lecture. It is requested to all of you kindly revise the facts and figures that all we have discussed in this lecture and keep yourself ready for the next lecture. With this note, let's end this lecture and thank you.